Hello, today is Thursday, and it is the 23rd of August. A lot to go over in this particular video, going through silver, gold, as well as the gold to silver ratio. And we'll start off within the weekly chart for silver, with each one of these candles representing 1 week worth of data. So far, with another day to go in the week, it is up almost 9% for the week. A clear break out of this trading range and outside of this 18 average band. Also, we're coming close to this trend line that connects the three previous peaks. As this is a logarithmic scale, I'm sure the linear one it has already taken it out, but I refuse to use linear scaling charts because, quite frankly, it does not do the trick. Now, as far as this large gain is concerned, you see the major breakout above this, and when you see it of this nature, a lot of times you can give precedence for this thing just to pull away very large. That's not always the case. You'll see what I mean when I look at the hourly time frame later on. But it's definitely something to consider. But the same old stuff that I talk about, when you break above this band, what you want to see is you want to see this band, of course, start to go higher, maybe come back within it, and then break whatever resistance it established. We don't know what that is going to be yet. So that's generally what it is that I'm looking for. Now, as far as this 8.73% gain, I put this up over a year ago, which is the best weekly increases for silver since 1968. And we have a long ways to go to crack the top 10 list, as we got to make it to 17.75% or higher to do such. And if you look at these dates for when these movements occurred, you had a gain of over 50% from 1979. The second largest gain was a failed breakout in 1987. And then again, close to the top again on December 31st, 79, 1980, again in 98, 1980, 1980, 1980, 79, and in 74. So when I say we are quite due for a massive weekly gain, if not multiple or at least a handful of them, a 2 or 3 kind of deal, considering there has been 0 top 10 days during this bull market run, yeah, very easily we could be due for such a thing. Now, I've been making a lot of decent calls over the past little while, and not all of them have to do within the markets. In fact, I made a video which was called Silver Update and Saturday Investment on August the 9th of 2012. Keyword was investment, even though it was a football wager, as some people would state. And you can call that a wager all you want, but all of the investments that you'll hear the gurus on CNBC and MSN Money or any of those mainstream outlets that you think of, well, that's also a form of making wagers. So that's why I made it very, very clear. And I have these 3 words in here: particular, situation, and decision, that I was talking about. So in any type of thing in this that you're going through, you want to know what the particular is, what situation you have within that particular, and then when you know those 2 things, what is your best decision? So in this case here, which was in this Tennessee game against Seattle, the particular was a preseason pro football game where you had quarterbacks battling it out for starting positions, and an over-under that was extremely low at 36. Therefore, my decision was to play over that total. And 27 plus 17 is 44. That was, of course, over the total. There's been a lot of calls that I've made, especially this last week. I made some calls within the gold to silver, but let's go on to gold, and we'll go back to silver again. So first, we're going to take a look at the weekly chart for gold. And before we do this, this here that you're looking at, this is my Dropbox folder. So in here, when you see on the more information box, directory for images used, all the images that I use on a particular date are placed in here. So you have the older photos. I started doing this on June the 15th. All these photos are included. And then a few historical ones that I just do now and then, basically. So that's available. You're not going to see this in a Windows Explorer, but you'll see it on your browser. And if you click on an image, you right-click on it, you can click on Save As, and it's ready to go. All right, so let's now go to gold. We'll move on to silver after that, and then to the gold to silver ratio. So we'll start off within the weekly chart. And what we're seeing is a test of this significant Fibonacci resistance level, or the first of two that it's going to need to get above for the bull market to get reestablished based on point A to point B analysis. Again, we'll look at this 18 average, and it's been choppy thus far, which is giving us even more precedence to have a clear break above it. And what choppy is when you go above, below, I guess sort of above, below. You keep going above and below this band, it's always going to be sideways action, and that is choppy. Choppy can only stay for so long, and then a trend will have to be resumed. I've been stating that there's been a chance, of course, that it can go down to this level, but that's why I talk about you need a clear break out or break down from a particular level. There has not been that within this, of course. Now we'll move this on to the daily chart, and the daily chart for gold. I was stating on Monday, as it was just in here, that I would expect at least to go up to this level. And the reason for this was because of the constant test of 1623 and the consistent amount of higher lows that was being in place. And it was very interesting because I was watching another analyst talking about the gold markets and stating that if you were to be going long for a breakout above this, then that was a sucker's bet because it was up against the Bollinger Band, yada, yada, yada. Well, to me, I don't think it was a sucker's bet, and again, it turned out to be a very good one. I'm not a big fan of Bollinger Bands because, quite frankly, I find that they are too close to the price action. We can see now that it's coming close to my upper bands, and we're going to see on silver how it's hitting its on a few time frames and so on and so forth. Basically, what now we're seeing is that it's taken out this level. It has not come back to support because oftentimes when you break through, what you're looking for is a pullback and then something like that. Well, this didn't occur. So as it's going higher up to 1650, 1655, you got to say to yourself, okay, wait a second. No support's being found, at least as of yet. What it definitely looks as if we're going to have a test of this 1685 level. And from this point, as of the making of this chart, that's 13 points or $13, less than 1% away. So the risk versus reward at this particular time frame is not that good. Obviously, if you have some sort of pattern like this, then it can look a little bit better. But for now, not that good of risk versus reward for the short-term movements. Of course, plan on the long-term time frame if you don't have much of a supply or very little at all, basically. I don't think there is a bad time to buy whatsoever. Going back, of course, if you've got a large supply, I've basically been stating that you want to basically the best time is either wait till the pullback or wait for confirmation above here. So you're in this long wait period. You're still in that. Same is true, of course, for silver on the weekly time frame as you are waiting for that move down to 20. Again, you need that clear break down below this level, which hasn't occurred, or a break above this level. Let's go into silver. Let's go very long term now. And let's take a look at the yearly chart. This is going back for about 100 years, or during the reign of the Federal Reserve. We come up to this top, you find some support, and then you're back up to your previous high. This is a cup formation. Now, people have been talking for a long time, oh, will we see a cup and handle formation? I've been given the same answer every time. I don't think so. It's not showing that it will. It very easily could, but we kind of got to come back down to this 20 level to even form the handle for the cup. But you don't even need this on a bullish level. In fact, it's even more bullish if you don't make the handle, because that tells you you don't need to have that massive or deeper pullback. But you do see within this that you had a second test of this level. You have pulled back, which is very much normal. And any move back up towards this level, the odds do increase the chances of taking it out. And given that it's been in a large secular bull market with some nice rate of ascents, why would you expect there to be anything else? Of course, when the Fed prints the fiat debt notes as easily as they do, you can't help but understand, or it's so easy to understand that it's just bound to keep going to the upside. So now let's take a look at Fibonacci, just looking at this. And I a lot of times like the quarterly chart, but the problem with the quarterly chart is I will not get this data in here. So instead of a 3-month chart, I'm going to open up a 4-month chart. And the 4-month chart will contain the 1980 high within it. So Fibonacci analysis states you had a clear break above this level. So when you break above it, the things that I state is A, are you going to have that pierce above and fall lower? No. B, are you going to have a fast move to this level? No. C, are you going to come back and find support at this level? Yes. And then you find resistance, and then A, are you going to have a big pierce above it as you're here? Well, yeah. Then you come back to support, and notice here, you see this line comes up to it, pulls back, and then in here you can see it started here, pulled back again, and then as it broke through, boom, large gain. So then the three things. 1, is it going to be a pierce above? No. Is there going to be support at this level? No. Is it going to have a fast move to the previous high? Yes. So those are the things that you look at. Again, you're at the 23.6% retracement. This is a 38.2. So it's still difficult using this type to state if it's going to happen first, a move here or a move there. But obviously, there's no need for a 38.2% retracement. If 23.6 does a trick, then it does the trick. So we've already seen that. We've seen that now on the weekly time frame. Let's now take a look at silver on the daily chart. Then we'll go to the hourly chart, and we'll move this on to the gold to silver ratio. So there's the resistance that got broken, and it made a quick move up to this level. So now what's it going to be? Is it A, is it going to be that pierce above and then find the resistance there? I don't know yet. Are we going to find support at this level? Again, I don't know. Or is it just going to have that relatively fast move up to the next mark, which is 32 2/3? Have to keep our eyes and wait. But when I was talking about a while back, I was even stating, even back in here at $27, $28 an ounce, basically high 27s, low 28s, that it looked really, really big or high probabilities as a $30 move to come into play really in around the time frame of Labor Day. So that was a hit. So now that we have 30, that doesn't mean it was going to pull back. It's just when we get there, it gets to a situation of, okay, now what is going to transpire from this? And we're still waiting and seeing, because the first thing is it's taken out the 30, and the amount of resistance that this level faced on the short-term time frame last night, about 20 seconds. And then it found support for about 20 seconds, and then it lifted higher. So basically no resistance whatsoever within the 30 level. So I'm going to be looking to see if it comes back down there. If it does come back down there, the probability odds of going long at this time, putting a stop somewhere below for a reward that's better than the risk, is very, very good. Okay. Now, as far as the hourly time frame is concerned, this is as of 2 p.m. Eastern time today. Notice you hit the band, you hit the band, you hit these bands. These bands just keep on hitting, and it has a little bit of corrections here and there, but it really keeps going higher and higher. Now, I thought of a great idea that I'm going to do on the weekend to show many different markets on one chart. Silver, gold, Dow, oil, whatever. I'll put about I can probably get about 6 or 7 on one. And I'm going to try it this weekend to show the weekly variances and differences from each one. So I'll try that on the weekend, Friday or Saturday or Sunday. Trend line analysis, we can draw a trend line that connects this high. You can see that it's hit 4 previous levels. What I like to do is do a matching level and then drag it down. And I like to go to the first support level, or the best one. So there we go. We have our trading range. So now for support and resistance on breakouts, if it goes lower, second support level is in here. This one below that would be the 23.6 level from the 27.95 low and whatever the high happens to be. Right now that's placed at 30.83. And of course, as far as resistance breakouts, if it breaks above this resistance line, what I like to do is I like to take the difference of the movements and do something like this. If we do have a breakout to the upside, then I would expect it to reach somewhere within this line somewhere. Okay, so that is that for silver. Let's take a quick look at the gold to silver ratio, and we'll call it a video. We're going to do the 38-hour chart. Each one of these candles representing 38 hours worth of data. There we have a 38.2% Fibonacci test. It's bullish and bearish for this thing to go higher when you see it as it is. Now, as far as the 18 average is concerned, you can see uptrend, 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 consolidating here, then it's failing, finding resistance, and there's your breakdown right over there. The reason why it's bullish and bearish, if it's bullish, obviously what would be the case is you go higher, find some sort of higher low, and then resume the trend. For it to be bearish, you establish that of a lower high, and then if you come back down to this area, increase the chances you take it out, and if you do so, well then the same thing that I've been talking about before as far as the 3 options that would be available. Now if we take this thing out a little bit further, this pretty much goes back to this pretty much the year-to-date chart of the gold to silver ratio. If we look back going to the start of 2008 for the most part, I got a 289-hour chart. Now why would I do such a weird number like 289? Well, I have a little over 28,900 ticks worth of data, and I have to multiply this by 100 because it's 289 times 100. So that's why it's a 289 period chart. But I have the 2008 high. This is back in October of this time frame when gold was 700 and silver was 8.5. And we have this low of a little under 31. And that's, of course, when silver was 50 and gold was probably around 15 or something. Okay, so what does this chart tell us? For a move to be a failure, and the move from point A to point B, for this to fail, it needs to hold and stay above this level. So far yet, it hasn't failed, and it may not fail. I don't know. But you come up and you find resistance perfectly, for the most part, within this level. You did not find support at this mark here. This is one of the very few times where Fibonacci didn't work out the greatest. But with that being said, you have yet another test. Increased chances it takes it out. And it's starting to pull back a little bit. So here's the factor. Now what's the next thing going to be? Is it going to be a higher low or a lower high? Because if you make a higher low and come back to this level, it does look strong for that to be taken out. Now a lower high, no matter if it's a higher low or not, so let's just say it's a higher low, and then you make a lower high, and then you come back down. Well, it's looking like now you're going to at least have a test of this mark. And generally speaking, when the gold to silver ratio goes lower, then both gold and silver will be going higher for the most part. When the gold to silver ratio goes higher, then they usually will both be going down. And the reason for that is because when the markets are both going higher, it's very common for silver to have a period where it gains 6% and gold only 2%. Same thing on the downside. When the metals are going down, silver drops 6%, gold only drops 2%. So that's a decent reason for why that is to be the case. And that'll be it for today's video. And have yourself a great day. Bye-bye.